Welcome to an Alternate Hue. I'm Hugh Anderson, and this is some of what came across my desk this week. I was hoping to avoid the COVID-19 theme in my inaugural video, but as they say, when in Rome. This is one of those charts courtesy of Mark Yesko of Morgan Creek that at first glance calls for an aha. See, I told you so. COVID-19 is at the bottom of the list. How bad can it be? Then one quickly realizes that this chart is ordered chronologically. So with the data still pouring in, only time will tell how bad this pandemic will end up being. But by the looks of things, we have a long way to go to catch up to the Black Death pandemic of the 1300s, where over 40% of the world's population perished. We've been warned repeatedly that COVID-19 is not like the normal flu, whatever that is. But as we digest the daily updates, this chart gives us a reference point as to how severe an impact COVID-19 might have, but also how much the healthcare system must contend with each and every year. Our frontline heroes have been heroes long before any of us heard of COVID-19. Now let's ponder the unknowable future and try to figure out how we're going to re-enter the post-COVID-19 world. This graphic by Peter Atwater of Financial Insights shows how we'll probably wander back into that world slowly but steadily as we feel more comfortable with going out. So now let's move from the so-called real economy to the financial world. Back in 1971, Rod Stewart told us that every picture tells a story. So let's see what this financial picture might tell us. This graphic depicts how market cycles evolve. After a lengthy bull market from the depths of the Great Recession, we had the 30% drop in March and are now enjoying a very healthy bounce. But according to some past market declines, we may be setting up for the final cleansing of past excesses. Does this mean the end of the world as we know it? Hardly. But it does portend further investment challenges before the all clear. Here's an example of one of those so-called investment challenges that we'll get before the all clear. This is the actual market performance during and after the tech bubble burst at the turn of the century, courtesy of Hedgeye. You'll note that after the initial decline of over 30%, sound familiar? The market rebounded over 30% before succumbing to the economic reality of a pretty severe recession that ultimately took the market down substantially more than the initial drop. And at that time, the whole economy wasn't closed. You'll also notice that the bounce phase, despite being significant, never recovered the peak market value. Which leaves us with today's market. The current bounce is predicated on a select few companies. In fact, 5 companies represent over 20% of the S&P 500's market capitalization, and the bulk of the remaining companies represent far less. The implications of such a narrow market are worrisome to say the least. I'm not a big fan of that market as a roller coaster cliche, but sometimes it really does feel like that. Captain Sully may have some competition. Thanks for watching. That's all I have for now. Until next time.